So let's bring it to forms of Bitcoin exposure. I was going to ask a little bit about portfolio allocation. Now, you both had some interesting comments there about how some families don't want to go below 90% and so on. But let's talk about the forms of exposure also, because obviously we can hold Bitcoin in our, in our multi-sig and cold storage. There may be some families who are interested in having Bitcoin ETFs or maybe treasury companies or maybe some kind of mining exposure. What are you seeing in your clients in the family offices? What kind of Bitcoin exposure do they have?
Most of my clients have very low basis Bitcoin. So basis is a capital gains tax thing. We're probably all familiar with that because we hate the fact that there's no de minimis rule for capital gains tax in the United States. But most of the clients that we see in Bespoke are low basis Bitcoiners. They either bought it at, like, no joke, $5, or they mined it in 2010 and they've got a bunch of it. And so positioning out of that native ownership of Bitcoin creates a massive capital gains tax event for them. And so we usually are sitting on that Bitcoin in structured, like really elaborately structured limited liability companies, various irrevocable trusts, various charitable trusts, to help them then start to rotate out of that low basis Bitcoin in ways that are tax optimized so that they can do a few different things. They will either invest in private companies because they've got certain investment theses that they want to express that you can only express in the private markets. Some of those are Bitcoin related, some of them are not Bitcoin related. Sometimes they want to have exposure to more resilient fiat currencies like the Singapore dollar or like the Swiss franc. And so positioning into equities in Switzerland that are yielding the franc, for example. And so the point I'm trying to get at is that there are philosophical investment theses that clients express in other investments beyond Bitcoin that still have roots in their Bitcoin exposure. But we also see some clients say, well, I've got some cash coming in, and so rather than put that cash in a money market fiat account, let's at least maybe park it in an ETP for a little while, because we figure that a 6 to 12 month hold on an ETP in Bitcoin is going to yield me a hell of a lot more than 5 to 6% of fiat while fiat's going this way. And so they'll put their cash often in a highly liquid, non-Bitcoin native ownership regime so they can have access to the price performance on Bitcoin, but they don't necessarily have the emotional connection to, well, shit, I don't want to sell my Bitcoin. It's like, no, I can get exposure to the economic performance of Bitcoin without having to feel this angst of actually detokenizing some of my wealth.
On that, is that also a reason? Is there interest in things like, as an example, the preferred shares like Stripe, Stretch, Stride,
totally,
this kind of thing, like Stretch, if they're earning 9% or 10%?
Yeah,
and it's still kind of a form of Bitcoin exposure.
Yeah, and for our clients, it's more about experimentation and seeding activity in the space, because they're not really chasing yield as much. I mean, they've got all the wealth that they ever wanted and more, and so they're not really chasing economic returns, but they want to see continued experimentation and evolution of Bitcoin as Bitcoin kind of takes over or starts to permeate the trad world. They want to participate in that, and so we help them on the front side with their low basis Bitcoin rotate out in ways that are tax efficient, and then when they want to reinvest in something else like strategy shares or some of their new products or ETFs or whatever, or private companies, reinvesting those through the right structures, through the right type of trust frameworks or other entities, US, non-US. And so that's a lot of the work that we help our clients do.